And we're live. Welcome, everyone. And I am Rico, and I'm here with Gaurav from straight from India, and we are farmers in finance. On today's show, the taxman and the tractor. What's
Ah,
all that about? But before we continue, let's hear from Gaurav and how it went over at the fire
man, it was
last
really bad.
week.
So thanks for having me again on the. I'm really excited for this episode. For the last time, uh, it was one of the crazy experience. I was visiting Nainital, one of the hill stations in India, and I was on the call, and then my partner came running. Hey, he go, you want to die in there? Like, what happened? Why are you saying that? Why you busy on the podcast outside? There's a burning house next to the street. And like, oh my god. Then I call off. Then I when we went, the lights was off already. There was a big chaos. The house was on big fire, and
Wow.
and later on we find out that the lady never left the house, and it was so sad. And later, so we were up all night. We have to find a new place in the morning, and then we took shower, took food, and we prayed for the lady. But yeah, it is what it is. And so, just crux of the story: be safe, guys. Be especially in Canada, we have houses made of wood. Have your first have precautions, have like fire extinguisher at homes. I will keep one once I'm back to India from India. Then have proper insurances for your houses. That's very important. And beware about your surroundings. So the fire was there because one of the welding guys, he left something on, and then it heated up, and then it just created one spark. But it was the oldest building in Nainital, like that's the city name. Oldest, like the first building was constructed over there, so it was made of wood, like pure wood. And yeah, it was bad, man. So yeah, that was my story.
Wow, that's pretty crazy. Like,
It was
yeah,
crazy.
that's a little bit of a lesson too, because it tells you, like how preparedness and how things might be traumatizing at some point, and then you're caught in the moment, you're doing something, but and there's these signals coming in. Hey, you got to leave. Oh, the lights went out. Oh, it just happens, like, and then all of a sudden you're like, I gotta go. There is a fire, like how many steps did I have to take to escalate to the point where you're like, okay, it's time to leave.
Exactly, man. That's how people react in real life. Also, they're not proactive unless until the fire is next door now, or it's actually at their home. And let it be anything like your finances or your fitness. Let it be anything. So be always on the top of the game. Catch the signals. If you don't catch it, you're gonna be the victim. With that, I think we should start with today's topic.
Okay, so we're gonna start with the quote of the day, because this is very important to this show. You cannot change the circumstances, the season, or the wind, but you can change yourself. That's Jim Rohn. So
Mhm.
that makes me think a lot, because in farming, you learn a lot of lessons pretty much every day.
Mhm.
And in life too, right? Like you go about life, and every day you're like, oh, what was the point of that obstacle, or what was the point of that
Mhm.
instance? Why did that happen to me? We always ask the question. So it's
Yeah.
like that. We can't control like the rain or the frost or anything like that, right? And we can't, even in finance, you can't even control the markets for that matter, right?
Yeah.
But
Absolutely.
you can definitely control the way you prepare, right? And so taxes are just about the same. Even though this topic it's for everyone to understand, and really question in some point, because we're in finance, and a lot of people describe it, like, why do you pay 40% of what you make to some entity? And some people might have a response like, well, we pay that for building the roads, don't we? or having the life that we have.
Yeah.
But in today's podcast, I hope you can take away that we need to question where all these taxes come from, because now we have the the possibility with me over here in Canada and then Gaurav over there in India to compare, because sometimes we take it for granted how the systems work, and then by creating this comparison and this network, we might understand a little bit better of why things are in place. So just to continue on the quote, a good referral, a strong connection can save you time, money, and even in your land. And that's a huge part of building wealth, not just what you earn, but what you keep and who you can lean on. And here's a farming truth that ties right in. The best time to water is when the soil is cool. Cold water on hot soil makes the ground hydrophobic. It pools on the surface instead of soaking in. Taxes are in the same. If you don't understand timing and tools, your money just pools in the wrong places instead of nourishing your farm or your family. So today's we're talking about farming income and taxes, not to make you love them because no one does, but to make you aware, because awareness is power. And just like you prepare for the weather, you can prepare for the tax man. So what do you think, Gaurav?
Yeah, like we often say that the crop depends on the rain, but the harvest depends on the farmer. Same way, like taxes and money are the same. You can't control the government, but you can control how you prepare. And the truth is, like as I can tell about India, like many Indian farmers are losing lakhs of money, not because of poor harvest, but because of poor financial planning. And like whatever we talked before were the steps to take care of the financial part of planning before the harvest is there. But what we are discussing today is like the major chunk of the money being taken by the entity known as the government after the harvest is there. And without proper planning, you can lose a lot of money from your harvest, and you can lose your chance to feed your family properly just because you didn't prepare well. So today's topic will be around why preparing for taxes is important, and what are the different areas we should look upon, and how we can evade those taxes. Not like actually evade, that's a wrong word, but how to prepare for those taxes. That you pay minimum taxes, still you're good in standing with the government. Otherwise, they're coming for you if you don't pay. That's for sure.
Isn't that the truth? I mean, I want to, like, I was preparing for the show and I was like, where am I going to take it? But it's just it's just something like trying to make the picture. Okay, first of all, when was the tax? I mean, obviously there's different types of taxes. Uh, the government is applying, I don't know if a tax probably every year, because what they're doing is they're not managing properly their income, and so then they're forced to, because they don't have proper financial backgrounds. Nobody in government, if you look at their background, like, I mean, the last premier that we had was a school teacher, a drama school teacher.
Yeah.
How's that's going to do anything to the finances and keep a country running and being a CEO? They're called CEOs, right? Like these PMs are supposed to make decisions and know what things are going. So they rely on the tax. They're like, oh, well, we'll just make another tax. We'll just raise taxes on this, taxes on that. But when I say, let's take the income tax. I don't know but you're going to describe this later. Income tax in Canada is at 40%. So just to describe it, if somebody came and took 40% of your house, what would you do? If somebody came and took 40% of your car, what would you do? I just don't understand why people are not questioning the status quo. And it's like, like when somebody takes 40% of anything that you own, and especially when it comes to your income, like you have worked hard, and it's like, how are you not questioning it? How you're not preparing for it? Like, and then the best time they take it, it's in the spring, when you have the best morale, like you're like, oh yeah, this is the new year. The trees are coming to life. We're planting, we're get going, like with farming, it's just the most exciting time. It's like we get to plant the soil, we get to plow it. I mean, we get to plant the seeds and pre-start them. Obviously, here in Canada, you have to pre-start them. Maybe not in India because you got good temperatures. But anyways, you're just preparing, and then all of a sudden you got to think about filing your taxes, and you got to do it by a due date, or else hell will break loose. Like, I mean, seriously, like this is not feudal times. It's not like we're in the modern age. We have communication. We can communicate over the internet with the greatest technology, and yet we're still suckered back 40% of our taxes with nothing to show for. Because let me explain where the income tax came from. It started after Second World War II, and it was implemented to pay for the debt. Okay, because the government went overspending of what they were producing, and especially when everybody was out to fight a war. Obviously, all the industry had stopped, so there were like things in place, to limit consumption. People would like maybe like in the Facta Aguara Shiv last week, that they would fast once a week so that they wouldn't consume as much. So everybody was strapped in. Everybody was bound together, right, into into making it easier, right? And so they implemented the taxes to pay for the debt. But then, as the government became accustomed, let's say, to receiving these taxes, then it just grew the intensity of using this debt, and then they produce more debt, and then all we're doing now is paying the interest on that debt. That is definitely no good financial advice. I wouldn't financial advise that to anyone, to take on more debt when they can't sustain it with the income that they have. That's outrageous. And this is what governments are doing. And then to go over top of that, but that might be for another topic, is they use other countries that are struggling, maybe like India, to lower their currency, and then be like, okay, my currency is stronger than yours, so then I can exploit your country and catch up with mine.
Yeah, that's what they do.
And this is what's happening, like across the country. And then did you hear it back in like last year or 2 years ago, when everybody was outraged that their clothing was made by 15 years old or anything, or people like of young age, right? And that would not be allowed here because it would be called slavery and stuff like that. But it's okay if it's in another country. How is that okay? What's the difference? Kid is a kid, right? They need to grow. They need to make incomes. So just that was just a little bit of a rant, but let's get going on the show. Unless you have something to add, Gaurav, on your end as a financial advisor as well.
You said that the Canada was run by a school teacher. Can you imagine who is running India?
No, I want to know.
I will not name it, but he studied till 5th class, and he used to run a tea stall.
Wow.
And he's just focusing on like PR, marketing, but the real issues are, and we have introduced with capital gains, we have GST, and we have GST like 28% on some of the stuff. We have the taxes on the rise. We have taxes pretty much on everything right now. So that's like what they say in America, we say in India as well. First, they tax your income, then they tax your car, then you pay for the road tax, and then they put up a toll tax on the road, and there's a GST on the toll tax as well. And the gas which you're putting in, it's already taxed. So it's pretty much like I am being taxed on pretty much every step, and then whatever is left, I'm transferring it to my family. Then I get the capital gains. So like, where do we breathe? Nowhere, man. So America and India, like I'll say, the developed parts now, like in India. So if you have to see any country how much developed it is, just look at the tax brackets. So higher the tax brackets, they will categorize that country as most developed.
Yeah.
So that's a weird definition. Like that's like what I found out being like different parts of the world, but that's how the reality is right now.
I connect with that. It's such a passionate topic because it's like you said, you know, it's not just the income 40%. You buy any product, you got two taxes, right? You got
Yeah.
PSD and GST. And
GST.
then when I was going through a realtor school, let's call it, I found
Yeah.
out that GST is just a feudal tax. It
Yeah.
just goes to the queen. It's not even a tax where you go, okay, I'm going to build some roads. Oh, I'm going to build some parks, or I'm going to make the schools like even better, maybe paved with gold. I wouldn't care, right? But this tax goes straight to the queen or the king. I'm sorry. Um, doesn't it sound like medieval towns to you? I
Yeah,
don't
man.
know.
Is that like
It just,
too much whitewashed right now with the modern terms like GST and everything? So common people can't understand it. That's the whole point.
I know,
Like,
I know. I didn't even understand it until I went to school and somebody told me right there on the textbook. And I'm like, oh, is this what happens?
yeah,
Sounds like we're in medieval times. And that
yeah,
goes with every country in the Commonwealth.
yeah.
And
Australia,
England had a huge spread. I mean, they went to India, right? Like that's
India
how
was the
big that empire
India was.
was.
So right now they are rich because of Canada and Australia, but they were able to conquer these countries because of the money they looted from India. So they looted so much that we were as the richest country at one point, but they took everything. Like they took everything from us.
Yeah.
But
Yeah.
let's come to the topic, man. Let's save some taxes for our farmer
Well,
friend.
you kind of like mentioned it. A lot of one thing that it's quite eye opener, and it ties in with real estate. It's when you buy land here in BC, and nobody talks about it, but we are supposed to disclose it, and we have a contract of sale where it's actually disclosed that the buyer has to be willing to pay the property transfer tax. And
Yeah,
this ties in with our legacy because you were talking about, you know, if you want to leave a legacy, what would you leave, right? Like, what are the assets that you can pass on to your kids?
yeah,
And one of them is land, or now even a condo would be considered an asset. And so, but that's all in the realm of real estate, right? And as being a realtor, um, you would think that if you were to pass to your son or to your daughter land, or even granddaughter or grandson or nephew or whoever, right, that you decide to have that land, it would just be a simple transfer, right? Simple fee, simple transfer. But no, there is the property transfer tax. And who's preparing for that? And that's why, you know, we are farmers in finance, because
yeah,
we even have to teach people that there has to be a plan in place. There has to be an estate plan, they call it, right? A lot of people don't even know what an estate plan is. It sounds like, to me at first when I heard it, I was like, well, it sounds like something a rich guy would do, right? but it's not just a rich guy thing, you know. Like it goes down to it's whatever you manage to keep over time, like what we discussed about. Because if you keep the tax man, you grow your assets, and then all of a sudden, you know, you have something to give, right? Like something to pass on. And how do you keep the tax man off of it? is by creating an estate plan. And the best way is to protect it through insurance, right? And doing a proper plan. It's key to have proper coverage, proper protection, because you don't want to leave that burden. And we have seen over and over with families and farms, especially farms, because I mean, farmers, again, I like to repeat it over and over, but they're the key, right? Like without farmers, there wouldn't be food. And without food, there wouldn't be energy. And we're able to do things in life because we have energy. And if you take away that energy, you're bound to not do things. And if you don't do things, well, you become a vessel, a vegetable, right? Like in sort of the word. And then, you know, this kind of ties into what you're doing too. Like you're trying to better your health, and you're out into the retreat that I thought you were going to mention that you were out doing a yoga retreat and trying to get your health back in line, right?
Yeah.
So yeah, you want to talk about that a little bit?
Yeah. So I got a love letter from my doctor telling that I love you so much that I want to see you keep coming back and back, because I slipped away on my health. I took care of a lot of things, but that was the last thing. Then that's why I decided the day I got the love letter from the doctor with all the love points like thyroid, cholesterol, and everything. I decided, okay, let's get back things under control, and that's how I registered for my yoga course. Earlier, I thought that I would just do a retreat of like a week or so, but then I realized that okay, if I am just doing a retreat, it's a temporary thing. So I enrolled for a yoga teacher training program. So I will be in Rishikesh, that's a yoga capital of the world, for next 26 days, for almost a month. And I will be practicing like hardcore yoga for maybe like day in, day out, like pretty much 5 in the morning till in the evening.
That's awesome. That's really cool. And I mean, it ties into that. If you can only control yourself, right? And then, I mean, we're going off a little bit on a tangent, but I think this is a great point because you brought it up, and it's like we get so used to our environment and the ways things are around us, and then we get caught, you know, like we slow down a little bit and we try to take care of other things, and we just become reactive, right? And then our health slowly, you know, degrades. I'm gonna eat better tomorrow, and then tomorrow never comes, and then all of a sudden you get the love letter. I love it how you put it. You know, it's like now we'll say the love letter from the doctor or the love letter from the government.
From the government, love letter from the CRA. Oh, you have to pay this much. If you don't pay, you'll pay interest on that tax also. And if you don't pay, you sell your estate. Your family gets nothing, zero.
Man, so funny. So beautiful. Like sometimes we just gotta pause and just let that sink in, right? And then all of a sudden, what can you do? You got to take control. Your health is the number one wealth symbol. Without your health, you know, you can't do very much. You can't even pay for the taxes anymore, right? So you got to continue, right? And then you got to stay at top of health. And that again, it's preparation, right? And
so like you said that there are property transfer taxes. There's a love letter we call in India from the government. When a farmer buys a land, they have to pay a stamp duty, which is like 5 to 7% of the land value, and then another 1% registration fees in most of the states, and that's almost like 8% when you buy it. Okay, and that's the buyer who's going to pay it, even on the farmland. So, and the thing is, like, when farmers transfer these like this land, it is called ancestral land. If they transfer it to the next generation or they sell it, they attract 20% of the capital gain taxes. We didn't had it before, but now we had it. So only way to avoid that is to reinvest that money again in farmland. It's a section 54B. That's what in income tax, but that's what mentioned. And that's pretty much on the lines of the states. Like in states, if you sell a house and you buy a house within 2 years, you don't pay any capital gain taxes.
That's right.
So to all my
Yes.
friends who have any kind of ancestral property, even though you're not farmer, but you are looking to sell it off, just take care of that 54B. You will attract 20% tax. If you don't pay it, government will find out. Then they will send you a love letter. Then they will send more love letters to you, which is like uh, asking you to pay. In the end, if you don't pay, you're getting the most beautiful love letter. This is like you are adjourned, you are asked to be in the court. And once they say in India, you can get bail from any kind of the cases, but once you get an income tax case, you're done for your life. You will keep paying your CA and the lawyers just to fight for those things. And it's like basically say disheartening that people don't know, and then they make this huge mistake and their money is gone. Taxman takes it all.
Yeah, yeah, and then that just reminds me that at the end of life of the farmer that is willing to pass on the farm to their heir, that even if you don't pay, like say, I mean, with property taxes, you gotta pay them over time. But let's say you don't pay them, right? And all of a sudden you pass on, and you gotta pay all your income taxes, whatever past you didn't pay. You gotta pay the property taxes, whatever you didn't pay. And who's gonna pay for that? Well, it goes into the estate, and then the government is gonna, well, definitely not send you a letter then, because they got it, right? And then they're going to decide, okay, you can have this piece. So maybe you're going to get 30%, 20% of it, and they take the rest. And again, that's by doing. And then I know a lot of farmers, because a lot of farmers are like independent, like, no, I'm working hard for my money. And so do they deserve to keep it, right? But obviously we live in a system where it's created, and we have to understand the system in order to have proper protection for our family, for the future, right? And it's not just an egoistic thing, right? And like, just as if you were to get crop insurance, you're to get property insurance and life insurance to pass on and pay for these final expenses, because no matter what, nobody can escape them. I mean, there is a saying right out there that says there's only two sureties in life: death and taxes. Unfortunately, that's the truth.
That's the truth.
And as much as passionate as we can become, but they're there. And I don't think they're going to be taken away unless there's a huge renaissance and everybody starts speaking up and standing up and be like, no more, go with pitchforks. Oh, by the way, another thing that happened always, have you noticed throughout history, all of the renaissance, all the revolutions, all the passages on, all the standing up was from farmers?
Yeah.
Right? One of my favorite movie is Braveheart too. Remember when the Taxman came through and actually killed his wife, and then he went on a ravage, and then he saw the destruction that the English Empire was doing over in Scotland, right? And he was a farmer, right? He was happy and frolicking through his fields and everything like that, and then happy to return to a happy life. But then, the government or another entity came in and took it all away. But and that goes again. You won't see it until it's too late, right? So it's about proper preparation, planning, and having things in place that you can talk to your financial advisor. And obviously every situation is different. If you have a business or if you have a farm, everything is all different. So, what can we talk about next? Is what are we at? Oh, 30 minutes.
So
So, farm status. Oh, okay, yeah. There is programs out there. I don't know. We're gonna discuss this. We haven't discussed this with Gaurav offline, but here in BC there is grants, obviously, because farmers are keys, and the government knows that, and they don't want to oppress it too much that they're going to
yeah,
start a revolution, right? So
yeah.
they offer grants and they offer discounts. Some of them are pretty decent, actually. One of them that I did take advantage of once I had farm status. And again, to get farm status here in BC, you have to have at least 1 year, and then you got to declare that you have an income of $2,500. And then having that income gets you the farm status, which you apply for, and then you get all these kind of benefits, so to speak. And one of them is on fuel. And as we all know, we all need fuel, because if it's from transporting feeds, transporting goods, going to market,
Towing
fuel
your
is
farm with the tractors.
essence.
Yeah,
Right.
fuel is
Yeah.
energy. Fuel is
Fuel
energy.
is energy, exactly. So as you get grants or like lowered, reduced, because guess what, they take off their tax portion, and so they so to speak give it back to you. Oh, thank you
Yeah,
again. And so then you get discounts on fuel, which is a beneficial thing. You get discounts on tractor insurance, other types of insurance, house insurance, all that kind of reduce costs. And, at some point it gets, a benefit. If you reduce your expenses, you can higher your margin, your profit margin, and then you make a feasible business. And then obviously there's also tax reliefs in that sense. And now I'll pass it over to you, and just tell us a little bit about picture of what's it like over in India.
so in India as well, I have told earlier that we have so many subsidies, like which government gives. Like one is your uh, like they give it uh, free money, which is like 6,000 rupees, which is like $100. It's not much as per Canada, but it's a good amount for here. Or then there's like PM Fasal Bima Yojana, which is like Prime Minister crop insurance program, in which government pays 98% of the premiums in some of the states. Like if something happens, you just pay 2% of the premium amount. The rest of the insurance premium is being paid by them. And then you can get like agri infra fund, in which you want to build up something like a greenhouse, or maybe you want to start a farm. And they give like up to 2 crore INR, which is around I'll say 100 150 $200,000, with 3% interest rebate on it, which is like pretty low. But the sad part, most of the people, they don't know. The farmers, they don't know. They never leave their farm, they never leave their places. They they never ever do that. uh, we got okay. And then but one big problem in India is the generational transfer,
Huge.
because it's in India it's even more complex, because in Canada you don't have a problem that your neighbor farmer comes in and take over your land. They're still very, I would say, helpful to each other. But in India, let's say the farmer was there, his kids were away in states or maybe up in one of the cities, and they never knew what was there. They When they come back, it's already been taken, and since they didn't had a registered will for that, then you go through the court, and you pay a lot of money in legal fees, fighting for your own land with your all the documents. But like over there, there's a estate problem, or there's a problem like where people take over your land just by force. And once
Mm-hmm.
it's taken,
Mm-hmm.
you can't do anything other than going to the court. And sometimes, how much time it takes to take back your land? 30 40 years. 30 40 years. And you keep paying in legal fees. How to avoid that? One, have a proper will, or there's some smart farmers. So we have a term called HUF, Hindu Undivided Family. It is a kind of trust in India in which you make the trust, you have a PAN card in that, and you register your family members in that. You register the land under HUF, and then you have a like land pool for your whole family. You save taxes on the transfer, and then the pass on is very smooth. So, like we have estate planning, we have HUF trust planning, in which again you can use insurances as well to do it. Basically, transfer the taxes and transfer the land. So it is pretty good.
Yeah, I mean, yeah, again, it ties in with the estate planning, and then here it's similar. I mean, now I can see that there is resemblancy, and because of what the British Empire has left over the years, right? And so when you talk about the courts and legal fees, yeah, that just gives me the weebie-jeebies, because it was the same thing. That's another thing why I got into financial advising and financial services, is because of the people that I was around, and because I'm getting to an older age, more mature. I am seeing a lot of family and relatives that are passing on, and so having seen them and what happens to their estates and their assets and all that just made me go, what? That can't be possible. Like you said, like the government takes over and it goes into the state, and then they decide when to release it. When everything, when he gets paid, he or she, whoever's in government, I guess it's an entity, when it gets paid, then it goes on to divide upon. And then it's like you said, it's critical to have the will, but it's also critical, to get it registered. And that is all part of the estate planning. And in our financial house, it's like the roof, right? It's what protects everything. It's the cover that when it comes from the exterior, you figured that the government, as we pictured it, is the rain, right? I mean, it's coming, but there's ways that we can protect ourselves, and that's will is number one. And since I've joined and I've been in financial services, I'm like, have you done your will? Have you done your will to all my family members? It's like for most. And then even with my clients, I say, hey, you just bought a property. Did you write a will? Do you know who's going to pass it on to? Even though it's an uncomfortable conversation, but let me tell you, it's a conversation to be had, instead of not had and then be like, what do we do now? Like
clients thanks us for that, man. Like I have asked these questions, and they never have a clue, especially immigrants like us who come recently, bought a house like within 4 or 5 years. They were so happy, and then I asked these uncomfortable questions, like a doctor asks you these uncomfortable questions. Are you running well? Are you doing this, doing that? Are you eating good? Same as do you have a will? Do you have an insurance policy? For insurance policy, they discuss. For wills, they're like, why we need will? And then when I let them know that this will happen to your estate, even if it's your primary house, you'll not attract taxes, but if it's not defined, it will go under the probate, and this is how much your family will pay, or they will charge your estate, and they have no clue. And people thanks us, thank on big time, like you had this conversation with us. It's uncomfortable, but in the end it's important.
Yes. And then here's the question: do you have an estate plan? Do you know what that means? And then I just leave it to the audience. If you want to comment or let us know, we would like to, get our questions out. You can reach out to me or reach out to Gaurav, whoever you feel comfortable, wherever you are. Just ask the question. Hey, what does it mean? What is it? Because, like we can start talking about it, but, it's important to know where to go, and it's throw out your ego. Okay. Your ego is like, it's good. It's there. It's to protect you. But when it comes to your family, like you would do anything for your family, right? Like you would protect your babies. Like, our partner always says, like with the dangling line. You would cross it for $10 if it was down to the ground. It was 1 foot off the ground. But what would you do if it was like up onto the skyscraper? Would you cross that line? Would you walk across a bridge of 2x4s, right? But then what if your family was on the other side? Would you sacrifice yourself? And then it all comes about perspective, right? And so it's like we have to change our perspective when we have to question what we've been taught too, because don't forget that the schooling system, I don't know what it's like in India, but the schooling system is a program from the government. So what they're going to teach you is not to be an entrepreneur, how to be, like most famous entrepreneurs, actually, if you actually do a background check, they never went to school.
Yeah, same for India, man. For India.
Yeah, that's it. So isn't that hilarious? Like
even the rich kids who are going there, they know like why they're going there, what's their plan, and they go after they had some experience in their business. So they come back and join their businesses. So rich people, they send their kids school, but they know why. And normal people, they send their kids to school because they think they will be successful. But success is not like keep paying taxes. It's success is in how to save taxes and how to be an entrepreneur.
Well, exactly. Like it doesn't matter how much you make. That's Robert Kiyosaki. It's how much you keep.
How much you keep and how you
it's
keep.
how much you keep, right? So, and it goes with the estate planning and everything, right?
And
so
that's brings us to our next part. Like, what are the ways to keep your money in the business? Like, what you can deduct on a farm.
Exactly.
Because the deductions will help you to lower down your taxes, and it will help you to basically keep your money at home, because the money you already spend on farm is not coming back. But at least you can write off those expenses as your farm business expenses and get the tax rebates on them. So what are the different ways you can do in Canada?
Well, again, there is the GST exemption. Obviously, if you registered for a GST account, if you have revenues, they say if you have revenues about 35,000, then you can register for a GST account. But I would say just register and then get those deductions back, because every time you buy, a tractor, every time you buy fuel, that GST is on it. So a lot of people don't know. Just deduct it, right? And every time you service your truck, every time you do a repair, every time, there's no GST on seeds and food, which is a good thing. But just have a plan. And actually, that's what we were talking about it before. Even talk to a financial advisor, but also talk to an accountant, because the accountants, they do every day. They know, and you got to talk to them before the year before, right? Because the tax year, obviously, they try to change it every year on purpose. Like it's they have a business. They're running a business. The government is running a business, and at the same time, we have to prepare and be aware of that over top of our learning curves of the weather preparation and all that stuff. So there is lots of stuff that you can deduct. There is home office. There is equipment, like what we said. It can be vary. Like you have a dairy farm, so probably you have other depreciation and stuff like that, and maybe you have other things to deduct. Another funny thing that I deducted was the dog and the expenses for the dog, because I categorized that as a cattle dog. So then I could write off the feed for the dog. So if you want pets and you have a farm that produces $2,000, well, that's another way to keep a little bit of your money. I'm not talking a lot, but it's a little. How about you?
Awesome. For us in India, like you don't get any taxes on your farming income. Like if you're a farmer, you just produce like crop, you don't get taxed anything up to
Oh,
2
wow.
CR.
That's
Yeah,
pretty good.
but you got taxed around pretty much everything around it, like dairy, poultry, solar power. If you have a farm stay like Airbnb, or you process the food, then it is taxable. So it is a very fine line. Like most of the farmers, they just try to upgrade themselves and then they forget like what is taxable, what is not, and then they are caught at some point because they sell it off, they get some, then they get the love letters. But
Love
like
letters.
very few people know that you can get, like you mentioned, in dairy farm, we can get like up to 15 to 40% appreciation every year on tractors and dairy machines. Then you can get like tax deductions on your fertilizers, we can get on soil testing, then we can get on basically your irrigation systems, all are tax deductibles. But you
Wow,
can get
nice.
only these tax deductibles when you file taxes. And by the fact, 80% of farmers in India, they don't file taxes because they don't understand it. India
That
is, can you imagine, we are still 70% dependent on farming, and out of like those 70% like farmer dependent economy, only 80% of people, they don't file taxes because they don't understand it, and they think that they have to pay taxes, but they don't get that they will get the rebates. Another, and one another mistake people are making right now, other than like in processing and all of these things, they pay a lot of GST on fertilizer, pesticides, machinery. Pretty much everything is taxed with GST in Canada, in India as well. GST stands for good and services tax, just letting my audience know. And it is a pretty complex tax structure. Like you pay a GST, then you get rebates. We'll have a separate like
yes.
discussion on the types of taxes and what is in Canada and India, how to get around those. And but only less than 10% of farmers have GST registration. 90% are letting go of that money on the table, and that's a huge number.
That
That's
that
why
is huge. That is
then
huge.
that's why when you asked, like I was like, okay, I have to get on this one because there's so many people. We got lucky because we had a very good CA. We have a great, one of my best friends, Mukul, I'm just mentioning him in the call, is one great man. If you ever need any uh text like suggestion in Canada, all over world, or in India, he's there. He's because he's proficient in international taxes, Canadian taxes, and Indian taxes as well.
Oh wow, cool. What's his
Yeah,
name?
Mukul Gupta. So his whole family is a CA. His elder brother, his sister-in-law, and he himself is
A
a
generational.
generational chartered accountants, and he's working with few of the Canadian taxation firms, and he filed taxes for them, and he has like pretty good knowledge about all this stuff.
Yeah, yeah, no, and that's key, right? Like that's what we started the show with is just the network, and
Yeah,
who do you know, and it's like some farmers try to do it all,
yeah.
and most of the
Just like
times
any
those
other
are the
businessman.
farmers that fail, right?
Just like
Like
any other businessman, they want to keep it like one man show. But not,
yeah,
like I say to everyone, businesses are complex now. You need a good team. If you can't hire a team, have a good consultants in terms of your, maybe your marketing, your sales, or your real estate guys, or your financial advisors, or your CAs. Get them. Like, not everyone is expensive. Not everyone
yeah,
is expensive.
yeah, yeah, and then like and connect with their hearts too, because some people are just about the money, but some people are just out there to help out people, right?
Yeah.
And we need to collaborate, and that's what I see with the different platforms that are emerging and having success because they connect, like EXP, right, as in real estate, and Experior, and others, because they connect, because they give you purpose, and then there's more collaboration.
Yeah.
Everybody wants the next person to succeed or even be better than them, which is
Yeah.
kind of like the father son analogy, right?
Very well said.
Like any father would want their son to be better than them, right?
Yeah.
And if we leave a world where it's like better than what we founded, so to speak, right? Like just like your camping site, or just common moral practices, right? That then we wouldn't have issues, right? And we would be in what do you call it, Evan?
Yeah, like I will shout out here for my mentor and our mentor, Mr. Prabjeet Virk. He has made our this agency and this whole place so safe, and he's the reason that that's why we are on this call, because he
Yes,
always promotes like uh, do good and pay it forward, and that's the kind of culture we have in our team. So you're most welcome to join us for like free consultancy, or you want to grow in life, just understand about money, or you want to make a business by helping people, you're most welcome to join us.
100%, 100%. We're open doors.
Yeah, we open doors. Yeah,
We're
and
open
just letting
doors.
you
We're
know,
we're
for
eager to
this,
teach.
for this month, Rico, there's no joining fees for Expedia. You join for
Oh
free.
yes, yes. I got the memo. I got the love letter.
Yeah, he got the love letter, the good one, not the bad
Yeah.
one.
The good one.
Yeah. Let's come bring us to our second last part of our podcast, which is like farming as a business. What do you want to do? You want to be a proprietor, or you want to be in corporation? So
Incorporation. Yeah.
what's your take on this one? I will take for India. I would want to hear you for Canadian version.
Well, I would say incorporate. Um, Incorporate in any business you can. I mean, I'm having a little bit of difficulty incorporating with real estate because that's a different beast. The regulations are a little bit more stricter, but incorporation protects your assets, like your personal assets, from getting taken by not just the government, but even debts and everything like that. So, and also your tax bracket, as you might know, because the government incentivize productions and businesses and everything. So even the tax bracket is reduced. So there is
Yeah.
ways that you can take out of your business your income for your personal use, but there's also ways that, especially with farming, that you can implement the two together but keep them separated and actually get better tax returns. There is a little bit more. It's not all flowers and pretty things, because there is a little bit more to know as when it comes to tax time, because tax filing for corporations are a little bit more complicated, and that's where a proper accountant comes in. I mean, obviously you can do it yourself, but I know how people are. If you're focused on your business, just do your business. If you're good at farming or dairy, just focus on that, and then just pay out an accountant, and they will protect your corporation and give you ways of incentivize. And then we, as financial advisor, we have tools to use that taxed money into putting into the protection where you're actually benefiting and be able to pass on that estate. And then we're probably going to talk about it the next time we come together, and we're going to talk about that too, through the infinite banking concept or whole life policies, because this is goes too hard to me, because this is probably the most way. And we go over in the financial house too, we speak about how to protect ourselves from taxes. And when we look at it, we go with RSPs. That's the most common people know about RSPs and TFSAs, but they don't know on the other side whole life and proper tax shelters, right? That they offer. And so, a lot of people think, oh, I'm saving taxes now, but no, you're just deterring them later for a higher maybe tax bracket or anything like that. So I think incorporating is good, but you have to understand also where is the inflection point, where is beneficial for your business, for yourself, for your personal life, for where you want to go. So then we're running out of time, so I'll just keep it short. Over to you, Gaurav. Where is the best point to stay in India or even in Canada as we
Like
see it with
most of farmers, I would say, like in Canada, I would say if you're making up to like 75 to 80k thousand in your business, keep it sole proprietor. Let it be your business. Let it be your take example for realtors as well. Don't go for a prec unless until you make more than 80,000 to $100,000. In India, sole proprietor is good. It's simple, but it is risky. Again, it's everything on you. You pay taxes and everything. So in India, there's a better way. It is called FPOs. It is called Farmer Producer Organization. Like a lot of people can come together, and they are recognized under Companies Act. Best thing, you get 0% tax under up to 100 CR. It's like $10 million. You don't pay taxes till $10 million, and it is huge, and that's free money. It's like you can't imagine, like just imagine up to $10 million you don't pay any taxes. But the government took a if I'm not wrong, they took a target for 100,000 FPOs, but only 20,000 are registered. So it's my call. If you are a big farmer, you have friends and family, and who are into farming, just go together, make a FPO, write off your taxes, register everything, and then FPO makes sense if you are making somewhere between 10 lakhs to 1 CR. And if you're above 1 CR individually, then you go for a private limited company in which you pay only 22% tax, corporate tax, which is any day lower than your 30% personal slab. So up to 10 lakh proprietor, 10 lakh to 1 CR FPO. If you're individual, if you're a group, up to $110 million, you have no taxes, or like 100 CR. And if you are more than 1 CR individually, go for a private limited, because corporate tax slab in India is only 22% as compared to 30% personal tax slab. And that, because we're running short, I will just point out the most important thing, which I think Indian and Canadian farmers, they both miss, is like record keeping. I call it
Yes.
a cash trap, because 70% of the Indian farmers, they work with their brains and the drawers. Like they remember all the expenses here and they keep the cash in the drawers. No banking, no nothing. The uh, dark side of this: if something happens to your crops, you want subsidies for what? You don't have bills because you paid in cash. You don't get anything. You want to go to a bank to get a loan, they say that, where's your income, what are you spending, what are you earning? You don't get anything because the bank says no record, no loan. So for that simple solution, just have a Jan Dhan account or use UPI payments. UPI is a similar to Interact in Canada. We have UPI. It's much better than Interact, I'm telling you. Okay, and apps like Khata Book. Treat your farm account like your crop field. Neat rows, clear labels, no weeds. Keep it clean. Similarly, like your cash, debits, credits, all your subsidies or your everything, very neat and clean. No weeds, no brains on it. This one, just give it to someone. And like some of the pitfalls Indian farmers don't do, they don't report for the crop losses properly because they don't do bookkeeping, losing their subsidy and insurance both. They buy the land on relative's name, and later on they it's a property act, like Benami Property Act, they lose that land where even they paid that one. And selling like the land and without uh, getting any applying indexation, like we have a when you get a capital gain taxes, then we do a inflation indexation as well, and they don't do it. So what they do up to like 30-40% extra tax. It's like if you in India, most of the people, they save their crops in the warehouses. And when I see these pitfalls, I compare it like keeping your crop in a damp warehouse, where you will for sure lose your crop, like you're
Yeah.
losing your taxes.
Yeah. Yeah. And it's like you got to have a market for that crop because it was funny. I was just listening to Alex Hormozy, where he went in for a venture for supplements, and he stored all this stuff in air conditioning, but it had an expiration date, and so he had to come up with a fast way to market it. And then he goes that he said, I I went to going to Facebook advertising and affiliate programs. But anyways, yeah, it's important to be prepared to talk to an accountant. So we'll summarize what this show was about, because we talked about a lot of stuff, and there's so much more to talk about too. And we just didn't figure that we were so passionate about it, because it stems from, like, the freedom, right? Like, in order to be freedom in a thought, there is got to be some type of an oppression, right? And I don't say we're at war, but there is a lot of oppressing points. I mean, if the place where we lived in was beautiful and we didn't have the stress of finances and all that stuff, I would rather pay 40% on my taxes. But I don't see that. I don't see, I don't see the benefits, right? Like, I would agree with a lot of people if there was benefits, but there are not. And there's actually more and more problems. And the more and more the time goes on, I don't know. I can't, I'm an optimist guy, but I don't see it getting better unless we do something together, right? And we collaborate and we understand what's going on and we come up with the solutions. And then another Albert Einstein quote is, you can't come up with the solution with the same way of thinking that you came with towards the problem. So we have to change our mindset. We have to change our thinking. And so to do that, we need to find other solutions. And I want to introduce the topic of the next podcast, which is creating your own bank through whole life insurance policies, or, so to speak, the concept that Nelson Nash introduced, the infinite banking system. And I quote him, and that is a solution, but that is also a business. It's like running two businesses at once. Instead of running the business you're running now, you're running another business, and you have to learn about it. And so we're here to teach it. And this is where we think, me and Gaurav think, that's one of the solutions that are out there for us to talk about. So having said that, we're going to take a 2-week break, unfortunately, or fortunately for some people, because we care about life, and it's not all about work, but it's about play. I'm going to Italy next week. So, and Gaurav's got to concentrate on his yoga training, and he's going to come back and teach us a few skills. So I'm eager to learn from what he learns. And obviously we have to take some time. So we're going to postpone it. And obviously follow us on LinkedIn or YouTube and Facebook for our next show. And we're going to organize it over the holidays. And we're going to talk about the infinite banking system. So if you want to, we talked about problems. There's plenty of them. And that's why we're over time. But if you want to learn more about the solutions, here we go. We're going to start off on a fresh mind, happy mind, and positive outflow. And we're going to teach you, and hopefully you can come up with. And obviously we're making this show more interactive, and we're going to be able to show comments and outputs and get your input. I want to get everybody involved, because when it comes to solutions, it's important to know where we're going, and if what we're teaching is a benefit, because we could be just talking to ourselves, and drumming our own drums. So if you want to know more, and if you have any questions about the show, please reach out at rico@farmersinfinance.com. and or reach out to us on all the channels, LinkedIn and YouTube. Anything else you want to add today, Gaurav? And thank you so much, Gaurav. Your input and your knowledge is well taken, especially when it comes to taxes and savings. And also your perspective is amazing too, because it's good I feel like now we have the technology, we have the means. It's good to know what happens in other countries, and we're not taking it from the government TV of what's happening, and it's good to stay up on top of things. So
So
yeah,
just
yeah,
to end with, like we said, to my farmer's friend, it's not like you're gonna sell your land, or your kids gonna sell that land, but you still pay taxes on that for sure. So it's better to save and plan for taxes, because in India, farmers lose more money to poor paperwork, poor financial planning, than to a poor rainfall. Your land can either feed your family for generations or feed the taxman once, which can be estate planning, which can be like anything. So the choice is how you plan. So remember, farming may be tax free in India, but everything around farming is not. Awareness is the real harvest. So, with that quote, I will say thanks, Rico. Enjoy your trip to Italy. Send over some good pictures on Instagram
oh yeah.
and LinkedIn. Uh, just show us like where you were born and how's your trip going on, because that's like something I'm looking forward, because I think we are planning for that for very long, and by God grace everything is going good and it will go great. And for me, yes, I will be preparing for my yoga teacher training program, and I'm excited for our show after third week, which is our favorite topic, infinite banking, and how infinite banking can be used by farmers in Canada. And even in India we have similar products coming up. I will be taking a greater better perspective about that. And yes, so with that I'll say good night, good morning to everyone,
Good morning,
and
good night.
see you next time. See you next time.
See you next
Okay,
time. Thank you.
bye.
Thank you for watching.
Thank you.
Okay,
Thank you
bye.
everyone. Bye. Bye.